Hello everyone, we are from Group 3 and in this video, we would like to present tax audit. Our team consists of 6 members which are NATRAH, BALQIS, MUHAMAD IRFAN, Syahmi, NURUL IZZATI and ARIF ZAKWAN.
In this topic, there are 5 content under tax audit, which is firstly, type of audit, second, audit compliance, third, audit process, selection criteria, and the last one is assessment and penalties. First of all, I would like to explain about the meaning of tax audit. Tax audit is a review or examination of taxpayers' business record and financial affairs to ensure that the right amount of income should be declared and calculated and paid are in accordance with tax laws and regulation. Next, IRPM carries out 2 types of audit, which is desk audit and field audit. This is the differences between desk audit and field audit. First, desk audit will conducted at the IRPM's office, while field audit will carry out in the taxpayer premise. Secondly, desk audit focus on reviewing the adjustment of income and are resolved through correspondence, but field audit focus on reviewing the taxpayer business record. Lastly, a desk audit involves checking all information on income and expenses, as well as various types of claims made by a taxpayer in his income tax return. While field audit, in the case of sole proprietorship or partnership, if the taxpayer's business record are incomplete, it may involve the examination of non-business record.
Field audits consist of 3 types, which are general compliance audit, special audit, and issue-based audit. For the general compliance audit, they are transfer pricing, electronic trading, and international client audit. For the special audit, have capital allowance, withholding tax, incentive, other technical issues, and expense claim. The main objective of tax audit is to encourage voluntary compliance with the tax laws and regulation and to ensure that the higher tax compliance rate is achieved under the SAS. In this regard, the audit officer is required to ensure that the correct amount of income has been reported and the right amount of tax has been paid in accordance with the tax laws and regulations. For the purpose of achieving voluntary compliance, the tax audit activity is one of the measures undertaken by IRPM to educate and create awareness of taxpayers towards their rights and responsibility under the provision of the ITA. The audit process are audit venue and followed by audit commencement, the visit, record examination, audit time frame, settlement of audit.
Desk audit is carried out at IRBM's office, while field audit is carried out at taxpayer's business premise. A taxpayer who is selected for audit will be notified through a letter of notification of audit. The audit consists of the names of audit officers who will conduct the audit, the expected time frames required, the records that should be made available for audit, intended date of visit, and the years of assessment to be audited.
Next part is the visit. An audit part is only applicable to the field audit. The audit normally starts with an interview. The purpose is to enable the audit officer to meet the taxpayers, obtain an overview of taxpayers' business activity, and to discuss the audit. The taxpayer will be asked to explain his business activities, accounting, and record-keeping system. During the audit process, the person responsible for the handling of the taxpayer's business and record will also be interviewed. During the course of an audit, the audit officer should be allowed to examine all the business records and to inspect stock and equipment physically for verification of the claims made. Records pertaining to the year of assessment which are already temporarily will not be examined. In certain circumstances, there may be a need to examine record other than business record where it involves the audit sole proprietorship and partnership. Type of record are bank of accounts for recording receipts and payment of income and expenditure. Second, invoice voucher receipts and other documents that are required to verify entries recorded in the book of accounts. Third, document, objects, and materials, articles, and things which are maintained and kept in the form of electronic medium, and any other record as may be specified by the PFIR.
During the examinations of record, the audit officer will not search for or take possession of any records. Examinations of the record will only be carried out at the taxpayer business premises unless the workplace provided by the taxpayer is not suitable. The audit officer with consent of the taxpayer may obtain record for examinations at the IRB office. While record and books of account are kept in electronic form, hard copies of such records should be made available for examination. If they are unable to provide the hard copies, the taxpayer should facilitate and assist the audit officer to access the computer system and copy the electronic records onto tapes or discs for examination.
The time required to complete an on-site examination of records is 2 to 3 days. The examination may be extended depending on a few factors such as the size of business and the complexity of the business transaction, the form in which records are kept, and the extent of cooperation from the taxpayer. The audit time frame is applicable only to field audits. After concluding the audit work, the audit officer will prepare an audit findings report for approval by the branch audit manager. Under some circumstances, the taxpayer is required to be present at IRBM's office to discuss the proposed tax adjustment with an audit officer together with one senior audit officer. The taxpayer may come to the IRBM's office without being called to seek clarification regarding the progress of the audit process or to give further information to expedite the settlement of audit.
The taxpayer will be informed of the audit finding, which will cover the following areas. First, audit issue raised. Second, reason and rationale for raising the audit issue. Third, the amount of proposed tax adjustment, if any, and the years of assessment involved. If there are tax adjustments to be made, a notification with details of proposed tax adjustment and rationale of making such adjustment will be issued. The taxpayer will be given the opportunity to state his views and give explanation on the audit finding and the proposed tax adjustment forwarded. The taxpayer is allowed 14 days from the date of notification of proposed tax adjustment.
The taxpayer objection will review and the taxpayer will be informed accordingly of the final audit finding. If no objection is received within 18 days from the date, the taxpayer is deemed to have agreed to the audit finding. Next, amount of income, tax and penalty adjustment and the years of assessment involved shall be notified. Notice of assessment or notification of non-chargeability will be issued. Last but not least, the audit case must completed within 19 days from the commencement of the audit. If the case cannot be resolved within 19 days, the taxpayer will be notified by the IRBM. So, completed audit cases will not be re-audited for the same year of assessment and issue. However, in the event of other issue or new information are received for the respective year of assessment, a re-audit be carried out.
There are 6 selection criteria of tax audit, which are location, specific industries, contentious tax development, third-party information, risk analysis, and taxpayers' previous record of return. For location, companies situated in prominent urban centres like Kuala Lumpur, Penang, Johor Bahru and Malacca are more likely to undergo tax audits compared to those in other cities. This heightened scrutiny is attributed to the well-established presence of listed companies and economic activities in these locations. For specific industries, industries with specialized focuses including property development, contracting, medical services, taxi operations, palm oil plantations, telecommunications and IT are chosen for tax audits due to their dynamic nature, susceptibility and the prevalence of numerous unresolved and contentious issues. Under contentious tax development, contentious tax issues that spark heated debates like transfer pricing, withholding tax, interest restriction, reinvestment allowance and rental income under Section 4A might be given priority in tax audits due to evolving interpretational differences between taxpayers, the Inland Revenue Board and the courts. For third-party information, the Inland Revenue Board Malaysia may initiate a tax audit for another taxpayer if there is a justified suspicion that the said taxpayer might be underreporting business or rental income, particularly when examining the claimed revenue expenses of another corresponding taxpayer. Under risk analysis, the Inland Revenue Board IRB utilizes information technologies to gather statistics on the average turnover and gross profit across all industries. Subsequently, a risk analysis is conducted to identify companies displaying significant disparities from these industry averages. Last but not least, taxpayers who consistently submit their returns late or fail to submit them altogether are at an elevated risk of being chosen for a tax audit.
For the right and responsibilities of audit officer, there are things that they must follow which are the do and don'ts. 3 important points that the audit officer must do while doing the audit are be professional, well-mannered, trustworthy, honest and with integrity. They must be ready to give objective of the tax audit and the right and responsibilities of the taxpayer, knowledgeable and fair in administrating tax laws. While the things that the audit officer should not do during audit are having any personal financial interest in the business of taxpayer being audited, recommending to a taxpayer that a certain tax agent be appointed as the tax agent for the audit case, and abusing their position or power carrying out his duties as provided under Section 118 of the ITA. For the taxpayer, the right and responsibilities that they must do are they must be cooperative, well-mannered, fair, honest and with integrity. They must provide reasonable facilities and assistance to enable the audit officer to carry out his duties. They also need to cooperate in providing complete responses to all queries. Meanwhile, things that the taxpayer must avoid are by giving any form of gift to the audit officer and transaction any business with the audit process. Make any form of payment to audit officer and obstructing or hindering the audit officer in the exercise of his function.
Rights and responsibility of tax agent. They are dues of tax agent which are professional, be fully conversant with tax laws and practice and with integrity. Be honest, trustworthy, transparent and give fullest cooperation when dealing with the taxpayer. Refrain from misusing information acquired or abusing his position as a tax agent for his own personal advantage. There are also don'ts of tax agent which are giving wrong advice to taxpayer and collaborating with taxpayer to avoid paying the correct amount of tax. Delaying the work of a tax audit or acting irresponsibility toward its entrusted duties, offering any form of gift to the audit officer. Assessment and penalties. If it is discovered after the commencement and audit that there has been an understatement or omission of income, a penalty will be imposed under subsection 113(2) or paragraph 44B(6)(b) of the ITA. The penalty rate equal to the amount of tax undercharged 100% accordingly. However, the DGIR in exercising his discretionary powers may consider a lower penalty of 45% to be imposed for the first offence.
According to Section 80 and 81A, the taxpayer is obliged to provide reasonable facilities and assistance to the RIBM personnel. Failure to do so will be liable to a fine of 1,000 to 10,000 ringgit, imprisonment up to 1 year, or both. Section 82(1)(a), every taxpayer shall keep and retain sufficient records for 7 years which the business income or adjusted loss relates to. Failure to do so will be liable to a fine of 300 to 10,000 ringgit, imprisonment up to 1 year, or both.
So that's all from us. Thank you.